I wonder how many of you have heard of a company called Amic Forging or Bondada Engineering. Resourceful Automobiles? Yes, that might ring a bell. But how about Varia Creations, Euphoria Infotech, Medicaman Organic, Hook Foods India, Cora Fine Diamond Jewelry, Maxposure? Well, some of these names are the poster boys of the booming listed SME space. And I mean a space that has seen really frenzied activity of late. Okay, now what do I mean by words like booming and frenzied? Here's some context. The BSE SME IPO index is up 176% in just 1 year and 6,376% in the past 5 years. Here's another stat. In 2019, only 408 applications were received from retail investors per SME IPO. Now, that number has jumped to 2.13 lakh applications. That's 213,000 from 408. I was talking about Amic Forging. Now, this is a Kolkata-based engineering company that has delivered an astounding 1,138.89% return since its listing on December 6, 2023. The issue size in almost all cases, of course, very small, but the profits on some are actually pretty good. Another example is Hyderabad-based Bondada Engineering, a company that posted gains of 843% over the past year. Yet another example, and this one I'm sure you've heard. The 12 crore rupee IPO of Resourceful Automobiles, a company that owns 2 Yamaha showrooms in Delhi. This IPO was oversubscribed by some 400 times. More examples. In 4 IPOs, Hook Foods India, Medicaman Organics, Cora Fine Diamond Jewelry and Maxposure, the retail portion was subscribed more than 1,000 times. Out of the 166 SME IPOs listed in 2024, 2/3 have given at least 50% return and 67 have doubled investors' money. But what about the remaining companies? Well, those are the red flags. Companies whose post-IPO flip-flops have actually raised concerns about just how much of the excitement for this space is really healthy. Example, a jewelry company called Varia Creations. Up 80% on day 1 to 271 rupees and then down 69%. Euphoria Infotech, oversubscribed 379 times. First day, up 82%, then down 55%. Medicaman Organic, up almost 3 times, then down 55%. Some instances actually border on the ridiculous. The IPO of a company called Boss Logistics was oversubscribed by 135x. Then, photos of its broken, crumbling office in Ahmedabad were widely circulated on social media. In fact, that space, social media, has been rife with voices cautioning investors against such cases. So, what's behind this frenzy? The regulators have taken note of it. What are they doing? SME IPOs really broaden the markets on both sides, for investors and for smaller companies. But is it another cautionary tale of a market flush with funds and too many wrong directions where they can head to? Let's find out. Listen on. It's Tuesday, the 10th of September. I'm your host Anirban Chaudhary, and this is the Morning Brief. First up, my colleague and ET Prime's markets tracker, Himadri Butch, with some more numbers.
Well, Anirban, for the benefit of our listeners, first let's dive into some key statistics for 2024. Now, as of this year, we've seen around 164 SME IPOs listed. And interestingly, about 84% of them are currently trading above their issue price. SME IPO space has really taken off in the last few years. So, but 2023 is when it went completely nuts. On the technical front, the BSE SME IPO index has gone up close to 180% returns as we speak, becoming the first Indian index to surpass the 1 lakh psychological mark, Anirban. And it is currently trading at a P ratio of 65.50x. And it has become the most expensive index among its peers these days. Now, we have over 25 SME IPOs where the subscription levels crossed 500 times.
So, what would you say is the genesis of this craze?
Yeah, so this whole trend really picked up steam around 2019 or 2020 when retail investors, especially with the rise in demat accounts, started participating in a big way. Now, companies like Dronacharya Aerial Innovations, Automobiles, and of course, Bondada and Amic really led the change and showed retail investors what's possible when you get in early, right?
What explains this craze, right? From starting from 2019, right up to this explosion, if I may call it, in 2023 and 24. The fact that we have seen 25 SME offerings seeing subscriptions exceeding 500x this year. What explains this craze?
So it comes down to returns, plain and simple, right? These SME IPOs have shown incredible listing gains. Returns for the far outstrip what people might expect from more established large cap stocks. Plus, there's this whole supply demand imbalance at play. There's only a limited amount of equity available in these companies, and with so many people wanting a piece of the action, prices shoot up fast. Now, people are thinking, hey, I don't want to miss out on the next Bandana or Amic, right? So it's almost like a gold rush mentality. The problem is that not everyone fully understands the risk involved. Now, this isn't a sure thing, and SME stocks come with a lot more risk than people might think, Anirban.
So, we'll get to risks in a bit, but Himadri, just wanted to also ask you, there are a lot of positives also, right? For example, this opens up the market on both sides, smaller investors and also humble but nimble-footed and promising companies, right?
Absolutely. That's one of the biggest positives. Now, SME IPOs makes it easier for smaller, more humble investors to get involved in the stock market. And on the flip side, these small, nimble footed companies get the chance to raise the funds they need to grow and innovate. So you've got companies that may not have the resources or scale to list on the main board, but they can access public markets through the SME platform.
And would you talk a little bit about the concerns? What are the top three concerns you would say around these?
Of course. Yes. So, Anirban, there are definitely some major concerns that investors need to be aware of. The first one is liquidity risk, of course, and that's a major risk. Now, after these stocks list, trading volume tends to dry up quickly. And that low liquidity makes the stocks prone to price manipulation. So, if you are trying to exit, you might find it hard to do so. Second risk is inflated valuations. Now, the demand has been so high that some of these companies are getting listed at prices way above their real earnings potential. So, we are seeing price to earnings ratio that don't seem sustainable. And finally, the last concern is market manipulation. Now, there are growing concerns or fears that some of these stocks are being artificially inflated, which could leave investors into a very tough spot in the stock price crash. And it's a very high risk, high reward game, Anirban.
So, also wanted to ask you, there seem to be clearly a different set of rules governing the SME IPOs on the exchange than, of course, the mid caps and the large caps. One of them, I think, is the fact that they are governed or regulated by the exchanges and not by SEBI. Is that right? And what are the other differences?
That's correct, Anirban. Now, SME listings are actually governed by more lenient rules compared to mid and large cap stocks. Now, for one, their DRHP gets filed with the exchange and not SEBI. So that's a big difference in oversight, but the NSE has started tightening the rules a bit. So now SMEs have to show positive free cash flow to equity in 2 out of the last 3 financial years to even list. Now, this rule was brought in to ensure that only companies with solid financials are able to access the public markets.
Now, the SEBI has been concerned about the surge. Here's Ashwani Bhatia, whole-time member of SEBI, at a recent event.
The checks and balances are simply not there. Nobody is actually saying no to the applicants. When we were bankers, we actually many times said no to a customer. Maybe the diligence that is required of the chartered accountants, merchant bankers, and exchanges is possibly missing, and they need to do some hard work over there. Please be good doctors to these companies. Don't give them steroids when they can survive on paracetamol.
The markets regulator is also concerned about some of the SME companies projecting what it calls an exaggerated picture of their operations and financials. These announcements are typically followed up with various corporate actions such as bonus issues, stock splits, preferential allotments, etc. So, are there people building these narratives that are fueling this frenzy? Yes. And to understand this better, I spoke to Sudhakar Reddy, Associate Professor Finance and Control at IIM Calcutta. So how do you see this frenzy in the listed SME space? And, particularly I'd like to ask you, what is the role of market makers in creating the narratives that's fueling this frenzy?
Yeah, that's a very interesting question. The market makers play a crucial role in SME IPOs, as we know, particularly when it comes to ensuring liquidity, stability, and efficiency in the trading of newly listed securities. We have a completely order-driven market, unlike NASDAQ, which is a code-driven market. So the concept of market makers come from the code-driven market system where for each and every security, there is a dealer or market maker, which is essentially a firm, which is always there in the market, ready to buy and sell securities at any point of time. So why did we adopt this for the SME market? We adopted this for the SME market because the SME market is a highly illiquid market to start with. Because investors or retail investors or specific type of HNIs, they are afraid to go to this market because they may not be in a position to buy and sell their securities at any point of time. Hence, the regulator brought in the concept of market maker, where the market maker in the SME platform is responsible to maintain the liquidity of those securities which are listed on the SME platform.
Understood. But are there concerns around these market makers inflating, the perspective or the image of the companies to lure investors? Because that is something that the regulator is very worried about.
You're right. So if you see, there is a very important conflict of interest thing that we see here. The market maker is there for a particular SME stock, which is listed on the SME segment. Now, what is happening here is the market maker is responsible for the IPO to be successful. Why? Because if an IPO is not successful because of one market maker, he may not get business for the next SME IPO. Okay? So this is one point. The second point is because the market maker is in the market buying and selling the shares of SME shares, there is a huge volatility also. Why? Because he is the one who is selling or buying simultaneously. That means he may have a problem of losing money if the share prices go and everybody is demanding the shares. So what happens is initially the market makers, what they do is they try to look for smaller companies which have decent financials, which fit into the regulators' rules and regulations that are required, and ask these companies to get themselves listed. And also they try to assure them that this is going to be a very significant valuation for the company if they get listed on the SME platform. And they show some examples of how they have done in the past. So this is how they try to bring, because at the end of the day, the market maker is looking for his business. We should not forget about that. That's the problem.
Right.
Because whatever is happening, he is the one who is going to make money.
Do you think in some instances, at least, the whole thing is orchestrated almost?
See, I should not say this openly, but yes, you're correct. It is orchestrated.
Right. And Professor, what about the stocks themselves? I mean, some of them have consistently given good returns to investors in the last 1 year, but others we've seen certain flip-flops in the sense of 80% up the first day and then plummet the next day, which leads investors to lose a lot of money.
If you see, you're absolutely correct in what you have mentioned, that most of the IPOs in this particular financial year or this year that we have seen from January till September have been extremely volatile. And if you ask me, I have analyzed the top most SME IPOs which have got listed this year, and 85% of these firms have significantly dropped in value.
Professor, can you give me an example to the contrary, which is an SME that has consistently given stable returns?
There is one company called Trident Tech Labs, which has been listed recently. And if you see, the company's share price was around 100 rupees during the listing time on January 2024, and it went up to 1,000 rupees in July. Look at the kind of earnings that this company has in the last 2-3 years before the
Right.
IPO.
Right.
If you look at this particular Trident Tech Labs, they have earnings and profits in the range of, for example, I'll give you 21-22. The profits and earnings have a growth of 200%. 22-23, it is 700%. And then you see the company coming for an IPO. Because
Right.
it had a 700% growth in profit, the stock price from 100 rupees goes to 1,000 rupees.
Right.
But
right,
let me
right.
tell you one thing. So after the results of 2024 March, the growth has fallen from 700% to 100%.
Okay.
And the stock price also corrected by around 200 rupees.
Okay. Would you call it a stable investment or not then? I mean,
If you see, the growth is there. At the end of the day, we have growth. I'll not say stable, it is highly volatile, but it's positive and significant.
right. Finally, Professor, what are the 2 or 3 things you think the regulator needs to keep in mind now that it's taken note of this frenzy and it's recognized the risks in them and
Yes.
it wants to be a little more stringent? What are the 2 or 3 things the regulator should keep in mind?
Yeah. So based on our experience of what is happening in this market, the regulator should analyze the regulations which are actually creating. For example, I was talking about the market maker. So there should be a regulation in terms of who should be the market makers and what is the background of the market makers and what kind of IPOs that the market makers are bringing in and what is the exact role that they're playing. And I would say the market makers should be made responsible for any volatility in the IPO. The second one is, if you see, there should be a technology and infrastructure enhancement that has to be done in the SME platform. The regulator should concentrate on strengthening the corporate governance standards because the regulator should mandate adherence to higher corporate governance standards to build investor confidence and ensure transparency. For that, there can be some training programs which should be mandatory, where these training programs for SME management teams will help them to understand corporate governance and regulatory requirements.
Now let's listen to a contrarian view. Market veteran Deepak Shinoy, founder of Capital Mind, does not think there is a frenzy yet.
So, first of all, I don't think it's a frenzy yet. There is a lot of interest in the market, but it's not like companies are raising very large amounts of money. The IPO market has changed to the point where you don't actually have to give money to anybody to apply for an IPO. You actually just have to block it in your own bank account and say that you're applying. Now, if an IPO is applied 10 times, that means it's a 10 crore IPO and you've got a 100 crore subscription already, then if I put 1 lakh rupees, the max I know that will ever get allocated to me is 10,000 rupees, right? So I could keep 1 lakh rupees in my bank account and bid for the IPO because I know that I won't get more than 10% allocated no matter what. So my money at risk is actually 10,000. Now do this with a 100x subscription, with a 1,000x subscription. Now, if I put 1 lakh rupees at a 1,000x subscription, only 100 rupees is at stake. So it's not really that bad. So, have a 12 crore IPO gets oversubscribed 4,000 or 400 times or something like that. Is this 12 crore person raising money at a ridiculous valuation? Well, their pre-money valuation is 19 crores. This was an automobile company of some sort. They had a couple of showrooms. That's what the SME market is designed for. A small company raising some small amounts of money with a small balance sheet. They have a 1.5 crore profit. They have a 10 or 11 crore balance sheet. They're raising at a 19 crore pre-money, which is 15 times earnings. This is not ridiculously overvalued. So you're not seeing a frenzy in terms of overvaluation meaningful. I mean, I've seen worse. I've seen people go gaga over a company like Reliance Power, which had nothing. There was zero fundamentals behind that company. And this company raised thousands of crores. I was one of the biggest families in India that did it. And that was a frenzy. That was crazy. But this, what we're seeing right now, if you look at these small examples, I don't think it's a frenzy. It's happened in the SME market for thrice before. It is happening right now in the main board IPOs. So I don't think this is any meaningfully different just because it's got the word SME tag to it. It's everywhere. There is a general feeling of bullishness. And I would say there's no special bullishness for SMEs.
But the whole thing of two things that have got the regulator possibly concerned is this whole inflated images of the company that are being portrayed by maybe market makers, maybe the companies themselves, and of course the intrinsic liquidity problems that they have, and which makes it very volatile. So on the first day after the IPO, you have a huge surge and then you have a plummet. Is that worrisome or no?
Losing money is not the regulator's problem. They aren't here to ensure you make profits. The regulator is really thinking, have we disclosed enough? Have the bankers evaluated it well enough? They have made statements saying the bankers should say no if they don't like an IPO. Bankers are there to ensure that all the rules are followed in the merchant banking process, and they will give you an opinion of this thing. But they are not guys who say that, listen, we love this company, and you know what, if you guys didn't buy it, I would rather buy it. They're not that kind of. They're telling you to buy this company, and they are on the sell side. They are the people who are marketing this product to you. And why are you giving them any reasonable meaning to say that they represent all shareholders and they have to somehow become this master advisor to shareholders? It isn't meaningful. It's not like I have to tell you, oh, this company has no free cash flow. It's there in the prospectus that they have no free cash flow, and many SME companies don't, because free cash flow means you're making positive cash flow after your capex. So if you look at a small company, they generally generate profits and reinvest the profits into the next thing. If you have 2 showrooms, you take your profits and try to make a third. You don't have free cash flow because you're growing. So you can say that this company doesn't have free cash flow, but me as an investor, I was like, I don't care if it doesn't have free cash flow. As long as he has cash flow that they're investing into capex, I'm fine. I'm making those decisions.
Understood. So finally, how do you see this panning out, especially in the SME space? Do you see it building into a frenzy and then sort of dissipating on its own? Or do you think the regulator will have to step in with more stringent rules?
So in general, I would say the market tends to go in that direction where it finds euphoria, it keeps building on top of euphoria. It comes to a point where everybody is super interested. Now we are at a point where investors are interested, and yet companies are not raising at ridiculous valuations. Tomorrow that will happen as well, where companies come and raise at ridiculous valuations, both on the main board and SME. There will be excesses. There will be bad companies that will list and then get found out because there will be a bear market afterwards, and there will be a crash and people will realize. And that's what happened. You've seen Reliance Power. Immediately after that IPO, the market crashed. They had to do a bunch of things. The price has not recovered, I think, 20 years later or 16 years later to the price that it was at that time. So there is a period in which there will be euphoria. There will be a period in which there is nothingness. And in nothingness, there will be no IPOs. So it's the bull market where all the IPOs happen. They tend to increase a lot in quantity. So even a Hyundai, for instance, which is doing a 25,000 crore IPO, is also coming in for the same reason. There is a demand. There's 25,000 crores nobody's even heard of in India in terms of doing one IPO of 25,000 crores. But today it's possible. And, when things like that come in, that is when you have this massive push towards IPOs. And maybe that's what the frenzy is building towards. So in general, you're going to see oversubscription as long as that exists. So I don't expect this to stop, but I do expect that there will be some regulatory increase in disclosure standards and perhaps directives to the exchanges to firm up the process of how they approve these IPOs as well.
So there you have it. This space will surely get more interesting before it gets more tightly regulated. And so, as an investor, awareness, caution, and patience are what one should practice to benefit from a market trend and not be a victim of it. That's it for today. You were listening to this episode on The Morning Brief. It was produced by Surohini Jain and sound designed by Radhas Naik. Do like, share and subscribe to the podcast. A new episode of The Morning Brief drops every Tuesday, Thursday and Friday on a listening platform of your choice. Check out our latest show, 7 at 7. That's 7@7, your quick daily roundup of financial news from India and the world, wherever you get your podcasts. Thank you and keep listening.